Folks, today I want to talk about the top tech stocks for 2020 and beyond. Most importantly, beyond. Since the pandemic crash in February, the number one sector bouncing back faster than ever is technology. Over the last 3 months, tech gained over 8% while blue chips gained just 1%. Big difference indeed. The Nasdaq 100 is inching towards old highs, while the S&P 500 is barely above the 200-day moving average. But the environment is now changing. Pandemic madness is calming down, physical stores are opening back up, and countries are reopening travel once again. Just this morning, I read that Italy is opening its borders. It appears that the stay-at-home rally is fading, and other industries like banks, retail, and industrial stocks are beginning to finally wake up. Now, the real question in all of this is whether tech will continue making headways or move back in line with the overall market. Now, while I do believe tech is going to soften up and potentially move back in line with the overall market, there's a chosen few stocks that are ripe for opportunity and growth over the next few quarters. And that's what I'm focused on today. The first stock on my list is LivePerson. Ticker symbol is LPSN. The company is the leading provider of mobile and online messaging business solutions, enabling a connection and communication between brands and consumers. In a nutshell, LivePerson provides AI conversationals powered by smart chatbots across various websites that sell. The reason why I like LivePerson is because I believe conversational commerce is the next big thing in e-commerce. We've seen big advancements in AI and natural language processing in recent years. This gives LivePerson the ability to create a smart chatbot which feels like real salesperson, which can help online experience and help close more deals. In my opinion, and this opinion is shared by majority of large e-commerce sites, that over the next several years, smart chatbots will be seen everywhere, which will increase LivePerson's growth over the next decade. Keep in mind, this tech is new and LivePerson is the leader. So far, the company is doing well. First quarter revenue was $78.1 million, an increase of 18% from a year ago. Moreover, the company signed 130 deals in the first quarter, a 10% increase over the year. The 12-month average revenue per enterprise and mid-market customer increase is greater than 20% in the first quarter to a record $365,000, up from approximately $300,000 in the prior period a year ago. To give you some examples of the deals LivePerson is making, during the first quarter, the company signed contracts with the following new customer: a top 50 US bank, a Fortune 500 health insurance provider, one of Europe's leading banks with millions of consumers, a top 20 global telecommunication provider, a multi-billion-dollar BPO. Technically, the stock has a high price target of $53 per share, which is substantially higher than its current value of near $35 per share. And the stock has 9 strong buy recommendations, which will help flow institutional sponsorship into the stock, which will cause price to move higher in the near term. Now, what I love most about LivePerson is how they're taking advantage of the AI technology to turn traditional call center models into relics and conversational commerce into a state-of-the-art selling tool. Now, this is a brand new tech and it's not going anywhere anytime soon. The AI trend is just beginning, and my hat's off to LivePerson for being a leader in the conversational commerce so early in the game. The second stock on my list is Chegg, ticker symbol CHGG. The company provides social educational platform for schools and colleges. The company was one of the strongest performers in the past few months, and demand for its connected learning platform is spiking, especially with physical schools shutting their doors in the wake of the COVID-19 pandemic. The company is in a very early stage of growth, powered by global virtualization educational megatrend that's not going away anywhere anytime soon. The goal is to connect the platform to majority of high schools and colleges and create a virtualized education tool to supplement academic programs. The virtual education world is tiny right now, and it's got enormous growth potential over the next decade. In the next 10 years, education will become increasingly virtualized, And Chegg is in the right place at the right time to take advantage of this multi-billion-dollar industry. The company has seen over 400% growth rate in the last 3 years, 700% growth rate in the last 5 years. Earnings had been positive surprises for the last 4 quarters in a row. And last quarter, we showed a positive surprise of 300%. That's huge. The stock has 7 strong buy recommendations, and momentum has been driving price higher in recent months. Chegg has a short-term price target of $70 per share, and I'm expecting price to move substantially higher over the next few years. I wouldn't be surprised to see the stock trade above $200 per share over the next few years, since virtualized education is only in the very early stage of growth, and Chegg has potential to see a buyout by a larger company that wants to get into the virtualized education space without having to reinvent the wheel, especially in light of the momentum we're seeing in this industry. I hope that helps. Folks, Lance Ippolito, he just told me something I can't believe. He discovered a market defect that allows traders to collect $4,946 every 7 days in 2 clicks. That's right, 2 clicks. Now, it doesn't matter if the stock goes up 10 cents or $10,000. You can collect a contractually guaranteed commission every week. And after some major haggling with Lance, I convinced him to let my subscribers in on his new strategy. Ready to make thousands every week? Click on the link below to get in on these trades. Do not delay or procrastinate. Do it now.